Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiradadia. We have with us Mr. T.P. Utswal, Senior Partner at T.P. Utswal and Associates LLP joining in. Welcome to the show, Mr. Utswal. My first question coming to you is, overall, what's your view on the budget that was announced today?
Well, I would take a view. It's an excellent budget, growth-oriented budget. No event, no negative news itself is a good news. And Absolutely. Therefore, people were all gossiping about estate duty, wealth tax coming in, this and that is all nonsense. I have been one consistent speaker for last 10 years saying that estate duty won't come in this country. Wealth tax also is not, is premature for our country to get in because tax collection cost is higher than the tax collected. And therefore, wealth tax also won't come. We have scrapped only very recently. And second thing, the finance minister has not made any changes as far as tax rates are concerned, except some surcharge on a cooperative society's minimum alternative tax. And rest of the thing is a surcharge on long-term capital gain of any type earned by, reported by an individual or by any person, which was subjected to higher rate of tax, at least individuals' cases. If the high net worth individual is earning an income beyond 5 crore, and he gets any long-term capital gain in any asset, whether real estate, listed shares, unlisted shares, it was subject to tax at the rate of 37%. If the income is beyond 2 crore, it was subject to tax surcharge at 25%, and otherwise normal rate was 15%. See, brought the parity of long-term capital gain being taxed at a surcharge of 15%, which is one of the wonderful things. Welcome step she has taken. Ultimately, the people who creates an employment, who has given the employment to the people, who have created industry, if you do not keep the capital balance in their hands, some surplus in their hands for the purpose of making investments, how do you expect the growth in the country? If you have to propel the growth in the country, it is required that some leeway should be given to those people who are high net worth individuals and high net worth taxpayers and save some money in their hand also. First of all, you did a wrong thing in the 2 years before. You realized that partly this year and you have corrected that. That's welcome.
Right. And overall, allowing taxpayers to file updated returns within 2 years for correcting the errors. How big a move is that going to be, do you think?
Well, it is at cost. If you correct your mistake in filing revised updated return within 1 year, you have to pay 25% on the differential income additional tax. Whatever tax which you pay plus 25% on that tax, that is additional. So it is a like filing fees. So second year, if you have taken 2 years to correct your income difference, 50% income. So therefore, there is nothing like a free lunch. So therefore, if you want to avail of these benefits, pay this much additional tax. So this, in a way, it is a amnesty scheme, perpetual amnesty scheme under the law.
Correct. It's absolutely understood. And moving from there on, if you see on extending the period of incorporation of eligible startups for providing tax incentives, and secondly, how do you see that, from a startup perspective? Do you think enough has been done for the MSMEs as well?
Startup, they have extended the period, and also they have extended the period for newly set up the companies. For newly set up companies which are taking 15% tax rate up to 31/3/2024, they have one more year extension has been granted. But here I would take a view that this is a chicken-hearted move. They should have moved it for 5 years. Manufacturing setup, nobody can, large industry, nobody can set up in 2 years' time. So therefore, they should have allowed this setting up of an undertaking for up to 2030, up to 15, because ultimately today 15% is the best rate. And you want to attract the foreigners to make investment in India, carrying on the business of manufacturing, which you are giving PLI scheme incentives to them. Then why not to give them incentive of tax rate? Because global tax rate itself is 15%. Our tax rate is now 22% versus this 15%. And you are removing all the incentives. So why not to keep this 15% also as a perpetual rate so that people don't try to go to countries like Singapore, Hong Kong, or Malaysia and then set up investment business here in India, manufacturing business in India. And you can attract more industries from China coming to here.
Right. And again, on that front as well, how big a move is giving impetus to GIFT City goes? Because, as you mentioned a point about moving assets or anything to Singapore or Mauritius or that side of it, one, a lot of world-class foreign universities and institutions, they've said, will be allowed in GIFT City. Additionally, if you talk about the International Arbitration Center, that's something which will be set up in GIFT City as well for anything under, dispute. And services for global capital for sustainable and climate finance in the country will be facilitated in the GIFT City. So do you think that's a really welcome move on the taxation front because of the tax holidays that you get to attract foreign capital?
Welcome. I think it's only one center in India, that is in Gandhinagar.
Correct.
But I think they need to have GIFT cities like situation in number of other places, particularly Mumbai. It was stolen from Mumbai. Our Bandra Kurla complex had the GIFT city, original international investment financial center. And this government, unfortunately, MVA government here was not very cooperative with the central government. And as a result, the central government moved it to Ahmedabad, the Gandhinagar. And then that place where the GIFT City virtually international financial center was being created, there was a bullet train station from Bombay to Ahmedabad going train. And that is in the basement, and the city was, the center was upstairs. But now bullet train will come. The GIFT City has no value in Bombay because it is a very small, and the whole place has gone to Ahmedabad. So Gujarat is benefited, and whatever incentive, whatever provisions they are creating, they are attracting all foreigners to come and do business with India or from India in the GIFT City, like leasing business of the aircraft or shipping, which is mainly attractive center to do business was Ireland. And now that Irish companies will have to set up offices in India, in Gandhinagar, and therefrom the leasing of aircraft is required to be done. And therefore, payment made for leasing of aircraft to a company set up in Gandhinagar will not be subject to royalty taxation from India, will not be subject to interest paid, also will not be subject to withholding tax in India, and it will be tax-free from them. So hitherto, when we were making payment to Ireland, it was under the India-Ireland tax treaty, it was exempted. Now it is now, why go to Ireland? Go to Gandhinagar. You have a problem, just take a bullet train, you reach Gandhinagar in 2.5 hours, you can resolve your problem.
Absolutely. So that's something which will be a welcome move as well. Coming to the indirect taxation front as well, what's your view, especially in terms of where GST is concerned? And in addition, if you talk about the special economic zone announcements that have come out.
Well, GST is not within the domain of the budget.
Correct.
It comes under the GST Council. But the government was very happy that they brought in, and the Nirmala Sitharaman announced the last speech, the last part of his speech was that the collection of the GST for the month of January was 1,40,000 crore, which was landmark. Yesterday it was announced 1 lakh. That was the purposely announced, looks like 1,38,000 crore, and she has corrected it purposely, saying this is 1,40,000 crore, highest ever collection on anyone's from the date when GST came in. That shows buoyancy in our economy. And this buoyancy in January, so much of collection, it means the rest of the year and the subsequent years to subsequent period, economy is now getting geared up. You see, the question is, pandemic has brought a lot of problems to the people. A lot of people started doing transactions digitally. Hitherto, you will go to the Kirana store, buy something in a cash, something will be subject to GST or not. That was a challenge. But now everything you are doing digitally, the person selling you the goods and the person buying the goods, the trail is there. So GST will have to be shown, and GST has to be paid to the government. That has also changed a lot of collection mechanism. And otherwise, what happens? These transactions are subject to cross verification, and if it is a cross verified and you have not reported the transaction, you will be in trouble. So I think people are now compromised. They are realizing what are the compliances required to be done, And because of that, they are collecting more and more money.
Right. And coming on the custom duty front as well, what's your view? Because
Well, as far as custom duty is concerned, I don't practice custom duty. But nevertheless, if you look at the announcement of the budget, she has made huge, and in fact, frankly speaking, this is the budget of custom duty. Huge changes in the custom duty, consolidation of rates, removal of the exemptions, and reduction in the rate of tax, etc. has been done. For example, air fuel is brought down from 10% to 2.5%. LPG import has been brought down from 10% to 2.5%. These are fantastic moves. And in fact, wherever there is a shortage in India of certain goods which we are importing, and with a view to reduce the inflation in the country, the government has ensured that the rate of tax is reduced. And wherever the goods are being produced in India, to encourage the Indian entrepreneurs to produce those goods, India has increased the customs duty, and that's a sort of an anti-dumping duty. And in fact, I would take a view that is a very welcome step.
Right. And overall, in terms of LTCG and corporate taxation as well, the proposal to cap transfer of LTCG at 15% and the corporate surcharge be reduced from 12 to 7%.
No. Corporate surcharge 12 to 7 is not there. Cooperative societies surcharge, which was 12% on minimum alternative tax, AMT, which is called alternative minimum tax, which is brought down to 7% to bring it on par with the corporate surcharge.
Right. And how big an impact will that be?
Not significant. Cooperative societies, yes, it is there, no doubt, but it's not very significant like corporate.
Right. And very lastly, especially in terms of where the virtual digital assets is concerned, how big a step is that? Because everyone was looking out for some announcement on virtual assets. We've spoken about a 30% taxation in terms of gifts or any income that comes from there. Do you think that's a market that is going to explore because of this?
That indirectly recognizes the cryptocurrency in India. So now crypto is officially you can hold. If you hold officially, you bought officially, then pay the tax on the sale. In case if you sell the crypto, you have made some gain, you should be taxed. Otherwise, people were not reporting that tax, not reporting the income, because it's a digital asset. You can digitally transfer anywhere, somewhere to anybody and sell it from there and receive the money indirectly and officially. That hitherto was possible. Havalas were going on and was taking place, but that has now will stop. Officially, government is allowed you to hold the cryptos and sell it, and the difference will be liable to tax. Unfortunately, any other expenditure other than cost of acquisition is not deductible expenditure. That has been provided.
Right. And very lastly, any other key highlights that we would have missed in our conversation that you think need to be looked at?
Well, if you receive foreign dividend from foreign subsidiary companies, hitherto the tax rate was 15%, that they have abolished with effect from 1st April 2022. 115 BBD was section, they have abolished. That is one of the very bad provision, bad move of the government. If you have got a companies abroad and making profits, you are now giving incentives to keep the monies abroad. Don't bring the money here. Otherwise, money should come back to the country as early as possible. That has not been that has been done, which is not a welcome change. Second thing, a lot of sectors where number of companies come together to bid and take a contract, EPC contract, etc. So, like in exploration of oil contracts takes place. 5 or 6 oil companies world over come together, do an exploration activity. Government of India, we have a unique animal in India called as AOP, Association of Person. And such more than 2 parties coming together for the purpose of carrying on business, it was considered as an association of person. And the association of person becomes a separate legal entity, and that was subjected to tax as the rate prescribed under the law. And if it is a discretionary association of person, it was subject to tax at the maximum marginal rate, which used to be 42%. And that they have changed it to make it the tax rate of every member will apply on their share of income, which is a very healthy and very good change which they have made it. It was enabling, it will now enable foreigners to do business in India through or in the form of association of person, which hitherto was becoming difficult and difficult. Then second thing, that portfolio manager, a foreign portfolio manager sitting in the Gandhinagar, in the gift city, was liable to tax. But if he is handling the portfolio of non-residents, he will not be liable to tax. That was the provision which they have introduced. Some rest of the provisions this time, if you look at, there are major provisions which are related to procedural aspect, which will not waste our time. So another, what the government this time, one major change which I find in this budget document is the tribunal decisions which are in favor of the government of India. All the income tax tribunal decisions, they have virtually amended the law to incorporate those tribunal decisions finding. And given the memorandum explanation also gives the reason, we are changing this because of the tribunal, this decision. There are other decisions which are contrary. This decision is in our favor. So we are changing that. This is a very unhealthy trend, because healthy as well as unhealthy, because I have been propagating earlier that as and when the tribunal decision comes in, and if you believe that that is your view, please amend so that the clarity comes in the law. Don't wait till the Supreme Court decide the matter. So therefore, it brings a lot of litigation will come down, possibly. That is one view which I believe. And so rest of the thing is all. Rest of the thing is, in case of an individual, national pension scheme and disabled persons, some relief has been given. COVID relief has been granted to some of the people who have received the benefit from the employer. That has been granted. So therefore, there will be no tax. There is certainty on that. These are the major changes. Otherwise, this time, honestly speaking, the budget does not have any major benefit or losses as far as income tax provisions are concerned.
Absolutely. Absolutely spot on, Mr. Utswal. Thank you so much for joining us on the show. Always a pleasure to speak to you and get insights from you. Thank you. Stay safe. Speak to you soon again.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.